Good afternoon, everybody, and welcome to Live Market Analysis ASX edition. My name is Carl Capolingua. I'm the Market Analyst over here at Think Markets Australia, and it's a pleasure to be with you as we delve into the depths of your portfolio, try and pick out some winners, turf out the losers, and add a bunch more really interesting stocks. The agenda for today is very simple. Over to you, Q&A, your questions about your portfolio versus my technical and fundamental analysis. Let us head over first and foremost to the AMI Broker screen. I'm noticing, just looking down my list today, uranium stocks are looking hot. So I thought I might do a uranium stocks review very quickly to kick us off, in line with the US uranium stocks review we did on Friday. And most of those, if not all of those, to be fair, have done very, very well if you manage to get onto those. Now, let's have a look. First off, I'm just going to go through alphabetically. I'm not going to do that entire list, which is the watch list I have down here, but I'll pick out maybe the ones that are more popular. Let's go that way. 92 Energy, an explorer in Canada. They've got some ground near some of the biggest uranium producers in that region. I would say I can go hold on that one, not a buy just yet. And you can see we've looked at this in the past. We've talked about a demand zone here at 32. We've talked about the need to move back into higher peaks and higher troughs, and it really hasn't done that yet. But let me summarize this by saying if it were to close above that area there with a nice big white candle, then I could get quite interested in it. But until then, I don't think we need to do a whole lot with it. So let me just draw the candle that I'd like to see on screen, and I'll leave it at that. So until then, it's a pass or a hold if you've got it. And only until then would it be a plus. If I can get the typing going, there you go, plus 1/3, maybe with numlock's on. Yep, numlock's on, good old numlock. Oh, here we go. Keyboards malfunctioning, or I'm malfunctioning. One of the two is definitely true. If close greater than. Let's keep moving. Well, they're going to be pretty lousy here, aren't they? ACAP Energy, that's a pass for me. Two downward trends. Alligator actually looks half decent. A little bit of a candle there, but it needs to get above the long-term trend with some decent price action before I get any interested in that one. Anyway, I was saying, hey, Carl, that's a really good one. You should look at that. And I say, sure, I will when the trends tell me to. And until then, there's really nothing here that interests me on any of those other two. This one looks half decent. I could own it. I don't think I'm a buyer personally. It's just too sketchy on the chart. You can just see the illiquidity in this one. That is very sketchy candles. Sometimes it doesn't even trade. Look at that candle there. And extremely illiquid. You can't even see the volume bars down the bottom past. This is the only one I said that you could, well, it's the only one that's producing. I shouldn't say this is the only one I said you could buy. There is one other. We'll look at that in a second. But this is certainly the main play for me. And it continues to be so. If you did buy Boss Energy based upon anything I've said in the past, happy holder on that one. If you didn't, it's a little bit of a ways away from the green zone, but I don't mind still continuing to add 1/3 on that. And Deep Yellow is the one which I think somewhere around here I might have said as the most super crazy speculative buy, or perhaps even on a break above 65.5, which it eventually did on that candle there. So that's your buy zone. And I did reiterate that buy not that long ago. Happy to hold on to this one if you did take that idea, but looking in here for potentially some black candles to take some off the table if you're lucky enough to get in there. I'm going to skip past a few of these, maybe head down to that one. That's a bit boring. That's Elevate Uranium. If you're not sure what they are, you can either look up the top code there, because I haven't mentioned them all by name. Where do I go here? Maybe Lotus. Looks okay, not great. Nexgen Energy, which actually we did looked at that in the USA, and it's listing on the New York Stock Exchange. I think that's where you trade it because it looks pretty liquid here, but otherwise I could go buy on that one. Paladin, obviously having some problems there in Namibia, has come back pretty strong. Look, I'm not sure if that's my favorite one, but if you've got it, happy to hold it there. No doubt about that. And Peninsula is one I have mentioned in the past. I said if it closes above that level there, plus 1/3, happy to stick with that if you did manage to get on. And just watching this area of supply. Could I buy it now? Look, it doesn't look terrible at all. but I'm certainly happy holder. Not sure if I'm a buyer based on some of them. Some of the other ones looking better. We have said plus 1/3 on this one 2 times in the past. You can see here and here, and a happy holder on Silex in the meantime. I think that chart looks very, very good. I'm deliberately not looking at the fundamentals here, ladies and gentlemen. This is pure technical analysis. I know that one's quite popular. I'm going to skip that one. Bannerman, actually, I think looks half decent here. I really do like this candle. If it can close on that high, I think it's looking quite promising. But again, I think I'm still going to fall into the category of wanting to see a little bit more price action, a little bit more of a turnaround in that long-term trend before getting into that one. But it is holding that one. It really hasn't fired at all. I know plenty of people are on that one and it's quite popular, but I just can't see the reason to be in that one over some of the other ones we've seen. I'm not even going to look at the other ones on the list. So there is the very quick technicals only ASX Uranium stock review to mirror the USA one we did on Friday. If you haven't seen that video, head over there. I know I pronounce Kamiko wrong. I know that. Well, I don't know. I'm doing it at times. It's just force of habit. I've got one of those old computer games from the 80s. It's still in my head. That was Kamiko. In my opinion, I don't care how I pronounce it. If you care how I pronounce it, then you're kind of missing the point. I'm a technical analyst, and the charts are going up, and I've nailed that, to be fair. So I may have pronounced that wrong for the aficionados, the uranium bull aficionados out there. Let us head to your request now. We're going to go over to Craig, and he wants to talk about coal, and I'd like to talk about coal as well. I think some really interesting charts in that area of the market. Before we do that, perhaps we should have a look at some coal prices super quickly. And I'm padding there because I'm trying to remember where I get them from. Here we go. Coal prices not looking fantastic. Let's put the line chart on there. And you can see there was a little rally through here, got a few of the coal stocks excited. But for me, I think the short-term trends are still very well established to the downside, as is the long-term trend. And I don't want to fight that. Look, I'm looking for easy wins in the market. I know many of you love the battle, don't you? You love to hold and hope that whatever you got, that's now a fraction of the price it was, goes back up, and you love the pain, and you're going to hold on until it eventually does. And it was good at one time, and it's probably still good now. Maybe the dividend yield's 1,000,000%, and the PE's 0. I don't know, but that's not me. I'm not a sucker for punishment. So I look at that and I say, look, we've still got some problems with coal. We've still got some potential problems there with global growth and probably what's happening in China. And that's the coke and coal price not looking much better there. So let's head now with that in mind over to New Hope Corporation, which I must admit, actually, that chart doesn't look too bad. It's better than I thought it was going to be. I wonder why. I honestly don't care why. But I think you got me. You got me, Craig. Those 2 out of the last 3 candles are very, very good. And by that, I'm talking about, what color have we got going here? Red, yeah, this one here and this one here. Very impressive. Only a tiny little response back there, so nothing too sinister. Nice big demand point down here. And as long as it stays above that and keeps printing higher peaks and higher troughs, it's all good, actually. I'm a little bit concerned about this, Craig, and you know why. Point of supply up there, and just whether I can make a long trade work into that point of supply, probably with a stop loss somewhere down here. Let's keep it red. So, see that little shadow, that upward shadow there? Old point of supply becoming a potential point of demand, and then massive demand coming in here. And I would say if we're trading beneath $5, that demand that's come in, and I tell you what, I have no idea what's come in. It hasn't come in because of the coal price, that's for sure. If we get beneath the demand that came in at that level, then we're in big trouble. As long as we stay above that, the demand's intact, but we still have to muck around with this point of supply. So can you get in at current prices? And don't forget, today's candle is live. I say that every Tuesday. It can change, and it will change. Can I make one to one? Probably not. Look, I can go hold on the basis of the strength of those last few candles, but I'm certainly not a buy there. I'm curious now. Let me head over here. And this is the other part of what we do in these sessions. We can have a look at the NHC company valuation. And what we're going to use is the Thomson Reuters Refinitiv Icon program, or at the very least, a spreadsheet based upon the data that comes from that that application. And what Thomson Reuters do, they're one of the biggest financial data aggregators in the world. And they go and ask the big brokers and research houses what they think of various companies. And if they're willing, the big brokerage and research houses will report back to Thomson Reuters that they think, for example, FY23 revenue is going to be 2.9 billion, and then FY24 and FY25 and FY26. These aren't my numbers, ladies and gentlemen. These are 6 of the biggest brokers: your Goldman Sachs, your Bank of America, Merrill Lynch's, Macquarie Group, etc., etc. And these are their consensus forecasts. So 6 of them, we take the average, and that's what these numbers are. And we've also got the historical data, what's in the bag. And then we can look at their growth rates over here and some of the ratios down here, both historical and going forward. And over here is my stuff, my proprietary intellectual property, where I try and find a valuation. But what we can say with the 6 brokers there, they do have a much higher price target than the current price for New Hope. That's 646, about 20% to the upside. Not seeing any strong buys in it. That's their rating. 1 buy, however, 3 holds, 1 sell. I'm going to say a little bit polarizing. Next place I'd like to head is the EPS line. I want to see bottom left top line growth. So through thick and thin, pandemic, supply chain shortage, rising interest rates, you name it, this thing is able to grow its earnings. We're not going to see that on a coal company. It's pretty rare that ever occurs, simply because it's a commodity price, and the prices of commodities tend to be cyclical. So too, therefore, are the earnings of these companies. And you can see then 2018 it earned 30 cents, then 32 cents in 2019, down to 10, back up to 20, and then boom, up to $1 as coal prices exploded. We're going to come in with a nice gain here. And then as coal prices, all those lower coal prices we saw at the start of this presentation, start to be realized in earnings, we're going to see earnings shrink substantially from a current $1.44 to 86 cents by FY26. Again, not my numbers, don't shoot the messenger, but the smartest people in the room are suggesting that this is going to be the case. So in terms of a compound annual growth rate for my look forward period of 3 years, I've got minus 16%. That's a big problem for me straight away, because I like to buy companies with growing earnings, because growing earnings more often than not translates into a growing share price. I'm not sure if you can go low risk on that one, given it's a commodity play, and given we have no idea where coal prices are going to be in 3 years' time. I'd like to change that to a higher risk rating, but I'll just leave it for now so you can see how this valuation plays out given the default setting. What we're going to see for a company with such awful growth in earnings going forward is it probably won't trade at the market PE. And the market PE is around about 15. So we're seeing a big discount here, and we should expect that. But is the discount too big? Doesn't mean we can't buy New Hope. Maybe the discount is too big. I mean, 3 times this year's earnings, 5, 6. Historically, it's traded around 27. Okay, so you could argue that using 5 is really not the right number, and maybe a 10 is a more valid number. I'm not saying it is. I'm just saying this is how the big brokers value stuff. They've got a fancy spreadsheet like mine, and they change the cells, okay? Now, if we were to use 10, we'd get 40%. I'm suggesting to you that the brokers are using a different number, something probably around about 8, which is, I don't think it's unreasonable. It's kind of halfway between the history and the current, isn't it? We can actually see if we use all of the numbers, we're kind of getting a 6.3. It's not as expensive as I thought. If we go historical, we're going to get a monster number, because yes, historically the PEs were much higher. Let's just go back to 8. I'm not saying that's the right one or the wrong one. And look, I'm not even going to muck around with that, but I'm just telling you that we've got some problems here. And that's really how I do my fundamental analysis is, are there red flags for me to follow the chart? And I think there are enough red flags in that company valuation to give me some cause for concern to be going along here on the chart. I know that's quite a comprehensive bit of analysis there for New Hope. I won't spend as long, I think, on many of the other ones. I'll tend to look at the ones I think we're ready to buy. If we're not ready to buy, then why would we look at the company valuation? Okay, this next one here is coming from Adonis, asking for Wisetech. Adonis watching me on YouTube at the moment. I should mention, if you're watching on YouTube or LinkedIn or Facebook, and LinkedIn, I have to check them on my phone because I've got so many things going. But try and send something through, and I'll do my best to get your question. Now, Wisetech. I love this. It's so fantastic, the questions I get from you all, because we can go from something that looked like New Hope, just really indecisive, to something that is just so decisive. the market loves Wisetech. There's no doubt about it. Think about the demand side, and really don't forget, ladies and gentlemen, demand equals cash. Cash in bank, cash you can get by what? How can you get cash? Selling other assets. Let's not even say shares. Assets. You could sell anything else. How else can we get cash? We can borrow. We can borrow cash, can't we? Yep. So that's credit or leverage. So this cash isn't just what you've got in the bank account. That's the other thing. Is cash easy to get our hands on? Is it hard to get our hands on? That'll depend on the current liquidity environment, interest rate environment. The bottom line is cash sitting in a bank account earning now 4.5%. And that's impressive in itself. There's a lot of competition out there for shares or against shares at the moment because cash rates are so high. So when we look at the demand side here, and it's just so decisive, it just wants to be in. It speaks to the opportunity that cash is seeing in excess of what it can earn by simply just being cash. The other part of the equation, of course, is the supply side. Now, what's the supply side? It's shares, really, isn't it? It's shares. A couple of ways you can do it, because don't forget, we've also got this thing called short selling as well, right? And that's where we borrow shares to sell. Okay, so you can actually get shares from people who are holding by borrowing off them. The bottom line is here, the only way you can get a chart like that is if there's very, very limited supply. People are holding onto their shares despite the fact they've gone up so much. And I keep getting told that the law, this is true, the law of supply, because my daughter told me this, but she's studying economics in high school. And she said, Dad, I need to revise this stuff. Can you help me with it? Because me being an economist, go check my business card, I am actually an economist. She said, Dad, you should know this stuff. And I said, well, okay, well, tell me what the law of supply is. She said, Dad, when price goes up, people should or will, not should, the textbooks are should, will supply more. Okay, so that's the first law, that's the law of supply. Apparently, they're teaching my daughter this. And I said, well, that's not actually true. And I could bring it to the chart of Wisetech and say, look, the price keeps going up, and yet people aren't supplying more. They're actually supplying less. How do I know they're supplying less? Because the price keeps going up. Why are they supplying less? Because they think this is a bloody great stock. Okay, forget the chart. They don't do technicals like you and I. They do all those fundamentals we just saw. They think it's great. Why does the cash want to get in hand over fist? Because they think it's great. Now, are they buying today? Look at the chart today. Are they buying today? Because I keep getting told technical analysis is like looking in a rearview mirror, right? Now, what is true is you can't see what's happening next. But I do believe that people are making their decisions today very rationally, because I get told by some other people that the market is irrational. I don't believe that. I do believe the decisions being made now rationally based upon all the alternatives, and the people who have the shares aren't selling, and the people who don't have the shares are wanting to buy. I know that's a long-winded story, and I do get long-winded sometimes, but what a wonderful chart that is. I believe I'm compelled, therefore, to head over here and look at Wisetech. I didn't tell you whether it was a buy, hold, or sell, but I think you know that because I've been all over the media for many, many months, not weeks, but months now, telling you that Wisetech is one of my favorite charts on the entire ASX. Let's have a look at what the brokers think about it. Not me, the brokers. You heard what I think about it. Okay, we've got 14 brokers, so it is a well-covered company. Their price target, oh, I love it. I love it when this happens. Their price target is 69.72, as much as 8% below the current market price. And that is wonderful because it allows me to make this point that don't always believe what the brokers say, okay? They're not always working in your best interests. That's just a little bit of a behind-the-hand hint there. But the other thing this could represent is that this stock has just gone up so much, it's gone past their targets, and they're yet to upgrade the targets. And they probably will upgrade the targets because the stock keeps going up and everybody loves it. So I think you'll probably see some changes in that in the not too distant future. Let's check the rating. 1 strong buy, 7 buys, 6 holds, and 1 sell. I'm going to say somewhat polarizing, quite a few holds and the 1 sell in there. I prefer it when there are no sells, but it's not a deal breaker for me. You know, I'm a technical analyst, not a fundamental analyst. Let's head over to the EPS line. Can we see bottom left top line growth? 2018, 14 cents, let's call it. 18 cents, 16. Okay, there was a pandemic that year, so we can sort of forgive a little bit of a dip there. But then boom, 33 cents. This is a pandemic winner, ladies and gentlemen, given what they do. I'll let you investigate what they do, but they are a winner. 56 cents, 73 cents, 96, 126, 169. Oh, I'm not kidding, ladies. I just got goosebumps. I got goosebumps. This is the stock I want to buy. Do I want to own New Hope Corporation with its 16% compound annual decline in earnings, or do I want to own Wisetech? I think you know my answer to that. We're not going to get this for 8 times earnings. That's impossible. It's too good for that. The market is going to pay way more than 8 times, way more than the 5 times they're paying for New Hope Corporation. In fact, based upon this year's earnings, they're paying 100, and most people would run a mile at that. Not me though. Because I know that with that earnings growth, if it can hit that, it's going to be like more like 44 times. It's still high for me. Don't get me wrong. This is still high. This is a monster. This is eye-watering, and this is the market paying for quality and growth here. But it's paid more. That's the message. I'm really interested to see what the Dynamic F says. It takes the median going forward at 69. I tend to top out around about 40. This is a very expensive is not the right word, but it's highly regarded. And see, I don't like to use a word like expensive or cheap, because I think that's just silly. That's putting my views of the market onto the market. And guess what the market thinks of my views, ladies and gentlemen? Guess what it thinks of your views? It doesn't care. So let me just say it is what's the right word? It represents how much the market admires this stock. That's what I'm going to say on it. Let me just see. At the cap out at 40, you're starting to see how the brokers think. If I cap out at 40, and 40 is a long-held sort of top limit for PEs, you can see the brokers are using something similar to me as well, okay? Is there anything in here to tell me that I shouldn't buy it? Look, I don't think so. But hey, if you are a value investor and you love getting stuff cheap at low PEs with high dividend yields, you're probably not going to want that. But hey, horses for courses, that's what makes a market. There are so many different styles out there. Let us head to IEL, which is IDP Education. Now, this has come up here from Chris, and also from a request here I had from Jason. So Jason, this is for you. Also follows me on Twitter. If you don't follow me on Twitter, get out there and follow me on Twitter. Geez, I put some great stuff out there, okay? If I say so myself, let me click the refresh button, because I've just noticed it's gone 20 past the hour, and it's 11:22 over here in a not so sunny Perth. I can see some blue now. That's great. I'm sure it's 1:22 if you're on the East Coast, or a variant in between. And the update has just gone through, and I'm waiting to see if that candle's going to change. And this is the whole point of me discussing this, is this last candle. If I say something based upon the last candle, understand that can change by the end of the day. Okay, what have we got here? What I can see straight up is, we've talked about in the past, we said it needs to bounce off that level. I'm guessing, go check the tapes. I reckon I probably also said something like, you shouldn't be in this, lower peaks and lower troughs. And if it bounces from here, which is a previous demand zone, go check the tapes. I'm pretty sure I would have said this. You're probably just waiting to get a better price to get out. And I would have said something like this. I think I said it on a stock earlier on. Watching for the black candles coming in at this area here, which is the long-term trend zone, which on the way up tends to act as dynamic demand, but on the way down acts as dynamic supply. It looks like that's exactly what's happened, and down she went. You should not have been owning this based upon my model. Hey, you do whatever you want to do, but absolutely 100%, 1,900%, 100% not an owner through here based upon my model. Now, you do whatever you want, but for me, absolutely no way I can own it through there. Okay, that's the past. It almost really looked like a great short, didn't it, through here? Okay, there's some good stuff going on. This is impressive. That huge white candle engulfing the supply that was there. Now, this is a really bearish candle. So the more bearish this candle is here, let's call them candle 1 and candle 2. Candle 1, candle 2. The more bearish candle 1 is, the more important candle 2 becomes. It catches so many traders off guard, short sellers, people who dumped it in a panic, and then some fund manager or fund managers came in on this day and said, you know what, our model says it's cheap. We're going to buy it. And they bought it to the end of the day. And they really flipped that market psychology on its head so that this now becomes one almighty point of demand, ladies and gentlemen. What we saw from there, actually not terrible responses, very limited supply side response, because if you look at the supply side response here and here, they're very different. And then this is fantastic. This is fantastic. This is amazing. This is not so good. Now, why are we seeing the supply? Okay, it's like ding, 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 ding. There's your supply. And if you've been suffering through my presentations for any period of time, you know what that candle means. You know we've found the supply. This candle is still live, however. So if I had it, and down here at candle 2, you know what I would have told you. I would have said, look, hold it on the basis of that candle. Watch out for the black candles or the upper shadows in obvious areas of supply, and we're there now. There's the supply. If it closes, I would say here or any lower, and we start to get a black candle, then I would suggest that it's a minus 1/3 sort of situation. Okay. Really only undoing what you should have done earlier on, which is not be in this thing. If it can power up and close with a white candle in here, then I'd continue to be happy to hold it, but only on the basis of trying to get out at a better level. So I can see a path to holding. I can see a path to selling some, but I cannot see a path to owning it. Okay, owning it is completely off the table, and it might be a little counterintuitive because you just heard me talk about how there's demand in the system. Demand is pushing price up. I can't buy this, ladies and gentlemen, because of this, and until that changes and the price action changes, I'm totally not interested in this company at all. I'm not even going to go to the spreadsheet because I have no interest in this. Let me keep moving. Got to go to William. Azure. Is it ASZ? No, AZS, I think it is. You've got a bit of a typo there. William. Now, it's one we've talked about many, many times in the past. It's one I've put out on social media. If you don't believe me, I know you believe me. I know you believe me. But if you don't believe me, you can always go here and just go $AZS, right? And then go put in my handle. Okay, and you will come up with every time. Click on latest, always click latest, not top, because you get literally in the time that they came out, and you'll see how many times I've shortlisted Azure, and there are going to be many times in here. I'm just trying to find the right one, but there will be many times if you scroll down that it was put in as my feature chart of the day. Okay, is it that one there? Not that one. Not that one. No, that's going back a long way. That's 2022. Accent, Bellevue, no, trying to find it. I know I've shortlisted this. There it is, Azure, I just killed it, Azure. There it is there, Azure. Okay, so that was at 48 cents. And that's just how to track anything I've said to you. We've also called it a buy in these sessions. And I'm making a point of that because I'm going to crow about it, ladies and gentlemen. And hey, let me crow about it because I think it was a pretty darn good pick given that it hit $1 today. So that's about double your money. And I've no doubt that value investors, bless them, value investors and people who just can't buy stuff that doesn't make money, yeah, there's plenty of them out there, would have told you not to buy it there because it's too speculative. And hey, I wouldn't have told you to bet the farm on it, but I would have said put some on it. William, hopefully you made some money. I really do. And I'd be taking some profits here based upon that candle. I'd be taking 2 lots of profits. So because I've got 2 reasons to do it. That candle's not great. It indicates there's a substantial amount of supply in the market. So often when things gap up like they do, they gap up for whatever reason. Now, I didn't know what the reason was going to be, but I bet you they announced pretty good news today. I don't care. If the news is that good, it will gap and it will hold. You'll get a white candle even with that gap up, okay? If the news is good, but the market just wants to sell anyway, you're going to get the candle you're getting now, and that scares me a little bit. And it's contingent on that candle staying that bad by the end of the day, and I don't know if it will, okay? But assuming it does, minus 1/3 on the candle, and then minus 1/3 on the round number. But what it does leave you with, plus 1/3 remaining, and I know this will be the toughest thing you'll ever do in trading, is to hold on to some after doubling your money like that. Because ordinarily you go, I'm out of here, all right? I sell because there's reasons to sell. If there's no reason to sell, I don't sell, and I'm never all out unless there's a reason to do so. And I can see 2 reasons to sell, and the way I sell is to go minus 1/3, minus 1/3. So if I bought 3 shares, I just sold 2 and I'm holding 1. Well done if you got on that one. To anybody else apart from William. Okay, William also wants SMP. I don't want to talk about this one because it is another nice looking chart. It's one we've talked about in the past. You can see there. Actually, that was to sell it down there, but I know, again, go check my tweets. Okay, it's been in there more times than AZS, that's for sure. SMP. Why? Because look at the chart. It looks wonderful. So happy holder there, William. I don't think these last few are anything to get too concerned about. They're very small black candles. We've got a little lower shadow there. I think it's fine. Where do you start to get concerned about it, right? Because I'm guessing you're on it. Somewhere beneath there, I'd be concerned. Let's say a 148. Closing at 148 or lower, I think you're lightening the load. Okay, so let's go close less than 1.48 equals minus 1/3. If it was to make a lower peak, like a low point of demand, to do something like that and then trade beneath the pod that's formed, and this is so hypothetical, it hasn't happened yet, you could go minus 1/3. But I'm not going to draw any more on that because I don't think I need to. Happy holder in the meantime, okay? Let us go to Peter's asking for HLO, which Peter's actually, getting goosebumps again. Peter's saying, I'll read it. I entered plus 1/3 on HLO last Friday, looking for another 1/3. Double goosebumps. Because Peter's thinking like a trader should think, which is, you know what? If it looks good, I add some. If it keeps looking good, I add some more. I totally agree with that analysis, and I totally agree. I wonder if this is the candle that you saw, because this is the candle that catches my eye right there. That's the one. Maybe it was that one. They're both good. Plus 1/3, plus 1/3. And today, if it closes here or better, Peter, another plus 1/3. So no complaints at all. It looks very, very good. Light green zone, dark green zone, and the candles are good. So yes, this price action wasn't great through here, but we fixed it through here. I would say today's literally, in fact, no, through here, we fixed the price action. So it's all good. Happy holder there. And for poor old Peter, we know, Peter, tomorrow it could be the worst day in Helloworld Travel's history of share trading. We just don't know, but you have to be okay with that. We have the tools now to deal with it if it happens, and your worst case scenario is you're going to lose some money, Peter, and that's it. And once we get over this idea that our worst case scenario is to lose some money, not all our money, and we have a plan to get out, it's so easy to move on and find the next one and the next one and the next one that's going to do the right thing for us. Okay, let's check out Helloworld, because I think that looks very good. It's something I would personally be happy to buy. So I'm going to head over here and go HLO. And we do have some broker coverage, 5 brokers covering 12.2% to the upside. So the brokers do like this one. We've got 5 buys and 1 sell. How do you like that? Who are they and what are they doing? I'm still waiting on some data to come through here. So, yep, there we go. Look at the EPS line. Now, we're going to have some problems here because it's a travel stock. So we were going well pre-COVID, and no surprise, it got belted, but it's coming back, and that's what matters to get you this 44% compound annual growth rate. Let's have a look. Let's bring this back to the default here. Delete that. So dynamic F, that's a forward-looking median PE 17, which is, I would say, absurdly cheap for a company that could grow its earnings that much. And we don't know if it will. These are broker predictions, right? There's a risk involved in getting from our current place to the prediction. But I think that's a crazy cheap PE because the market's PE is around about 15, give or take. I tweet those every Monday morning, what the market PE is. So you can see that. And the market PE, bloody hell, where is it? Okay, let me show you if you don't know what it is. Keep an eye on this. This is important, okay? Here, this one here. Okay, so we can see the market PE. The pre-COVID long-term average was 15.7. The current is 14.4. So it's saying that the market, according to the brokers, not me, Thomson Reuters, 1 year forward PE, the market is a bit cheaper than its long-term average. And around the bull market, the peak since COVID, the market tops the PE got to 15. And this is what it does, ladies and gentlemen. The market PE cycles between 20 at the tops of bull markets to 10 at the bottom of bear markets. Go check, it's like clockwork, to around about 15 in between, okay, which is about fair value. So when we consider that we're getting 44% growth, now the average market growth rate is sub 10% for sure. We're getting almost 4 times that for roughly the same PE. My spreadsheet's going to say this is absurdly cheap, and it does. It says it's way cheaper than what the brokers are thinking, and there might be some risks in that, and you could change this, and I'm just going to show you how it changes it, but I'm not going to tell you to change it. But I can't see anything in here that suggests that I can't buy this one on the chart. Okay, let's keep moving here. WA1, Mark Roberts. Mark's going for another one of my my Twitter favourites there. What did I say? This I can't believe. Oh, I must have said it because it's on there. Minus 1/3 here. That candle isn't bad enough for 1/3, so I'm not sure what I've said. I might have said if it does something, or if the candle turns out a certain way and the candle didn't turn out that way, but I just can't see me telling you to sell it on that. If you believe I told you to sell it on that day, then tell me, because I bet you can't believe it either. Because if I'm anything, I'm consistent. But again, go check the Twitter shortlist. It's been all over it. And yeah, no reason to sell this one here. Honestly, I would have dusted some here. I would have gone minus 1/3 on that day. I probably would have even gone minus 1/3 on that day. But prior to that, these aren't big enough or bad enough. These are starting to be big or bad, and this is big or bad here. But I think if you had followed me, you wouldn't have more than plus 1/3 left on this. And that might disappoint a few people, but that's just the model. But the good news is at least you'd have some skin in the game. But having said that, you could have added. I mean, that is just the most amazing add candle there. So's that one there, so's that one there, so's that one there, so's that one there. There are so many buys. And I don't tweet my shortlist every day, but there are just so many buys through there. What would I do with it today? Assuming that candle stays at or better with that close, it's a happy hold. I'm probably not a buyer here. It's just a long ways away from my green zone. But look, if it was to close on the highs of the day, then I could happily do it. So close on high. There's really no reason why you wouldn't. So close on high would be plus 1/3. Okay. So if I'm still prepared to buy it, then what does that suggest to you about holding it? It's 100% a hold. I'm thinking about buying it, and there's 0% sell there. And again, think of all the talking heads out there that would say WA1 Resources, oh no, doesn't make money, high risk, can't buy it. For me, I tell you what's high risk. This is high risk to me, ladies and gentlemen. I look at that, and they were the same people were telling you to buy this all the way down. They were telling you how cheap it is. Go check the records. See, I look at that, and all I can see is risk. This is a high risk chart to me. Yep. And yet I look at WA1 and I can't see any risk. I just can't see the risk in this one. As I said, it takes many different views to make a market. Let's head to Perry, ACDC, another one I've been very positive on the past. Again, go check the tweets. And we've also talked about in this session, Perry, absolutely no reason to sell this. In fact, if anything today, we do what, Peter is doing on HLO, and we just keep adding. As long as it keeps doing the right thing, we just keep adding to it. So happy holder there. That's the Global X Battery ETF. Now let us head to ABC. Well, we haven't covered this one in this session. I wonder if kind of rings a bell. Did I? Got a feeling I did. ABC. Because I just want to match up to where I think you should have bought it. June the 2nd. Did I run it as a feature? No, I got that one in there. Hey, I'm not right all the time. You can go check these, and everything is transparent here. I'm just trying to look for the white candle. That's Catapult Group. So I'm trying to find the white candle in the charts here. Maybe I didn't run it, but here, this is where you want to buy it, right here. That's it. That big white candle on the big volume. It's a no-brainer for me. And it's still a hold here. I can't see any reason to sell it because you've just got the most amazing candles Look at this, just white candle after white candle after white candle. You can only get white candles if there are programmed buy orders. Some serious money coming into this, soaking up and absorbing any supply it can find so that you're closing on the day because you've just taken out all supply in that day. You come in the next day, you take out all the supply again. So we just can't see the supply. Not to say the supply isn't coming, the supply is probably coming, but I don't think we're going to see it to here. And you will know it's there if and only if you start to see the black candles that tell you the supply's arrived. Until then, there's nothing to do here. Okay, but hold on. Can I buy it? Look, I think your buy day was down here, okay, or here. It's just so far away from my light green zone. And the problem is the tradecraft. So it's not so much the setup. So, one, you've got setup equals 100%. For me, 100% buy equals, I can't put 100% probability on it going up because that's just not how I operate, but, a very high probability of going up, right? Given the supply demand picture. But then you've got two is tradecraft, right? And this is how you craft trades. This equals your reward to risk, okay? And you can't just go into stock saying, oh, it'll go up forever, I'll get out when I see the exit. You should have an idea of where things are going to go wrong for you. So somewhere down here, certainly, if we're trading beneath there, I'd say we're in big, big trouble. You could maybe set a stop in here. And I'm just looking for the white candles and the little lower shadows to do that. And the question will become, and I'll let you do the work, whether we can make one-to-one, and we actually probably can. We actually probably can. So depending on how you want to set this up, and this depends on your risk tolerance, and I can't tell you what your risk tolerance is. Some people might say, look, I'm happy with a really tight stop like that to hit that at one-to-one. Others will say, no, I need a wider stop in there, therefore I can't make one-to-one. Others will say, look, it's too far away from the green, so I'm going to find something that's closer. So we'll find something closer today. Okay, but otherwise, if you've got it, 100%, it's a hold for me. If you don't have it, I think we've discussed that. Should you sell it? I think we've discussed that as well. There's zero reason to sell that. Another one. Look at all the plus 1/3 there. Hopefully some people, each time you listen to me, hopefully a few more people have an aha moment where they go, okay, yep, I'm starting to see how this works now. Happy holder. And this is the thing that baffles most people, is where I just go copy, paste, and they go, Carl, surely you can't buy here. It's gone up too much. And I say, well, actually, I probably shouldn't, because $10. Now, let me say this. I think it had its reaction to $10 yesterday, and $10 is an important round number. But if it can close on its high today, I don't think $10 is a problem. So I would happily go plus 1/3. It is a long way from the green zone, but all I'm doing is dipping a toe. If this is my first foray into AGL, for some people, it's not their first foray. They've been all over it. You can see that. But for other people, it's their first foray. And what I say to you, look, you're just dipping a toe in the water. We're not putting the house on this one. We take very, very small risks. If you have to buy 3 shares, just buy 3 shares. That's $30. And the reason why I need to buy a minimum of 3 shares is because I enter in thirds and exit in thirds. So by buying 3 shares, I have the ability to sell 1 share, and 1 share to get out. We don't know what's coming. We don't know what's under the surface. And that's why, right? I have such a conservative risk management model, so I don't just jump in. That's the point there. Okay, let's head back here, and I've done all of Perry's. Perry always gives me great charts. Well done, Perry. Let me head to the streamers. I know you've been very patient, streamers, so let me get to some of yours. A4N from Michael. I think I've said to get out of this one, or maybe at the most plus 1/3. No, minus 1/3. No, look, I think I genuinely would have been all out of this one. So if you had listened to me on this candle here, you would have just been cursing my name. You would have just, that guy, he's got no idea. He completely told me to do the wrong thing, because he said, get out a bit here, get out a bit here, and get out my last third there. And if I had 3 shares, I sold 3 shares. Okay. I totally agree. But this is going to add insult to your injury. That candle there is one almighty plus 1/3 for me. All right. So that's a get back in candle. And I think this is a get back in candle here. Okay. This look at the shallowness of that pullback. So this is adding more insult to your injury. And you're going to expect an apology from me that I'm sorry, I told you to do the wrong thing. I'm not sorry I told you the wrong thing. I didn't tell you to do anything. I just showed how I would have applied my methodology. But my methodology equally also requires me to look at that as a massive major buying opportunity. And then even these last 2 candles, as long as we can close here or better, I'd even be adding 1/3 on today's candle, because I think it looks very, very good. I can see the POS there. I am concerned about it a little bit, but not with, I'm less concerned about it because of this huge white candle, and that's really important. What I would have loved, though, is to see that happen on a bit more volume. I think that's somewhat disappointing, but I don't mind adding some risk back into this one. I'm going to take that off because I didn't tell you to do it. I'm going to take that off because I didn't tell you to do it, but that's the one I'm happy to do now, assuming it closes, roughly where it is or better. Okay, so if you curse my name, the piece of advice I would give you is you need to stop keeping score by ways of price, okay? Because you would only curse my name if you were looking at the price you got out at and then the price I'm telling you to get back in at now. And you say, you know what, you cost me 15 cents, you such and such. And my view on that is that basically it's irrelevant. I have to follow my model. I have to follow my system, because I tell you what, on this day here, let's face it, it looked awful. I mean, it looked absolutely done and dusted to me. As in, supply is clear and overwhelming, and this trend is changing, and more than likely it's going to come back here. And because I don't know the future, I therefore have to concede that this trend has changed and I have to get the hell out. Okay? I don't know the future. Okay? I didn't know that was going to happen. But the important thing is, don't keep score based upon the price. Keep score on, did you follow the methodology? Because how many times, right at this point here, how many times have you seen stocks just keep going? In fact, we saw IDP Education. When they turn, they turn. Okay, this one didn't. They don't all do that. Let's keep moving. I almost said sorry to Michael if I told you to get out earlier, but hopefully there's some advice there for you. SC Python is asking about a bunch of US companies, which I would love to talk about them, and I'll write them down after this presentation, SC Python, to do for you on Friday. But I can't do them now because, hint, we're talking about ASX shares. And I'm starting to build a follower base all over the world, which is wonderful. For Kay, I can't remember your first name, Kay, sorry. AGL I've done. For Wandim Nair? Hello, Wandim Nair. Can I look at ATHE again? Sorry, I'll do that on Friday. But we'll write this down for you. Either tune in on Friday or catch the recording on Friday. I will cover it for you, I promise. Adonis, I've done one of yours already. Can we look at Coles? I tweeted about Coles and Woolworths today. I had some really nasty things to say about them. What can I say about their chart? Look, I'm not a big fan of the chart, Adonis. If you had it, I can see a path to holding it, but really only while it continues to trade above that level, because beneath this level, I do feel that you're in big trouble, minus 1/3, and you've had many reasons in the past to minus 1/3 on this one. So when you talk about buy, hold, sell, I can say hold, but only on the basis that you will probably get a better price to get out at some stage in the future. Buying is off the table. It's just not for me, given the horrible price action and predominantly black candles. I can see the long-term trend is holding, and yes, that's a positive, and I get it. I know that the long-term trend zone has been fantastic in the past. Have a look at this, like clockwork sort of stuff. Will it do it again? I don't know. I don't know the future, and I'm not going to predict. I'm not going to try and predict it. I'm not going to trade it, because there's just not enough ticks in the boxes where I require them, and that's how your trading's got to be. Have you ticked enough boxes? Have you got enough probability on your side that's going to work out in your favor? And I don't think that's what this is about here, Adonis. SLM. Oh, what a monster. I haven't put the prices back, and I won't put the prices back. Let's forget prices for the rest of this session. This is from AJ Ausland. Look, I can't tell you to buy this. Simply, it's just so far away from my light green zone. And what's the importance of that light green zone? Well, if we get too far away from the light green zone, it's a way for me to not so much subjectively, but to objectively measure when something is more prone to mean revert, okay? And that's really all it is. We could see a mean reversion back to the light green zone, because you've seen how well, time and time again, that light green zone supports prices in the short term. The price mean reverts to the light green zone. But if you had it, I can certainly see a path to holding it. I mean, there's a big shadow here. I can see why you could have dusted a third on this, but if you haven't by today, I would say hold on to it. But keep an eye out for those long upper shadows and the black candles. That is supply entering the market, and I don't want to muck around with that. So if I saw more black candles or more shadows pointing up, I'd be looking to get out, okay? What we don't have, unfortunately, is the name of the company here. So let me head back, because we do want to know the names of the companies, and we'll put the colors back on for you, and it will appear. So there you go there. That's Solis Minerals, okay? Let me head back to the Zoomers. I need to do a bunch of Zoomers here. Let's go to Codan, and this one is for Colin. I think it looks very good, Colin, okay? Did we say maybe I might have given you a minus 1/3 in the past if it closed below 724? I think it probably would have, because it started to change that trend. But there you go. Look at the light green zone. It's a great segue, isn't it, into light green zone. Like it's great in the short term, and it pushed off that. And you might say, hey, Carl, just trust your light green zone, forget the price action. And I say, well, hey, I'm giving you the tools. You can apply it any way you want. I'm just going to stick with my method, okay? But I can see an argument there for, hey, until it maybe closes sufficiently beneath the light green zone, you know, hang on to it. But it's certainly done the right thing. Happy holder here. Could I buy it? Look, I think a little bit closer to the light green zone was probably where you wanted to buy it. Let me get rid of some of this stuff here. So really, that's the candle there, ladies and gentlemen. That's your buy candle. That's your buy candle. Today's got a little bit of an upper shadow, but look, if it can close at its highs today, then I would happily go plus 1/3. So let's just go close at high plus 1/3 for today. Okay. Let's keep moving there. I might have to pick up the pace a little bit. I don't think we'll do any more fundamentals. Hanelli wants JHX, which is today's the buy day. So assuming, Hanelli, that we can close up and around the current levels, okay, for me, it's a straight up plus 1/3 for all the reasons I've talked about. Don't need to explain myself anymore, I think, because, you know, I don't want to be the broken record. Looking out to points of supply, Hanelli, I know you want to know these because I know you will be attentively looking for points for supply side candles in and around that zone. But I think we're pretty good to there. I'm not too fussed about 40 because it's not like 40 is a surprise for James Hunt. It's been there many times before. Hanelli's question is, can I buy some more? May I sneak in Wesfarmers, please? Well, I think I've answered the first question. Let's have a look at the second question. What a wonderful case study here. So, Hanelli, I'm confident that you have done the right thing, right? You've done the right thing, and you have lightened the load on Wesfarmers, okay? So you have done this. You've observed lower points of demand. You've realized that you're in the Swiss Alps. You've looked left and looked right and drawn on your chart, Hanelli. You've done that, and you know that beneath here, you need to sell. And you might have even sold a little bit more before that. But certainly minus 1/3 on that one. This candle here, because it's just horrible, is minus 1/3. And then I would say down here, minus 1/3. So I'm struggling to see any reason to be on Wesfarmers at this point in time. Okay. But I know that's not a problem for you, Hanelli, because I know you nailed that one. Just nobody can see your comment, Hanelli. So just write to me somewhere in the chat. Let me enable the chat. I don't know. Send me a DM or something if you did it. I want to know if you did it. Okay. If you don't feel comfortable telling everybody, I'm not sure. Can everybody see the chat? I don't know. Tell me, did you do it? I want to know. RMS still looks good. You know, rest of gold has melted down. This one's hanging in there. I think it's fine. We even said add 1/3 not that long ago if it closed above a certain level. I'm not sure if it did. But happy holder here. I could buy it if I start to see the white candles come in, anonymous. But there's nothing in that chart there. Absolutely nothing which suggests that I should be selling Ramelius at this stage. Let's head to Haraju QOR. I've never heard of this one, but I know why Haraju is looking at it. Haraju is coming around to my way of thinking, and Haraju is specifically looking for these turnaround plays because Haraju's been listening to me long enough to know that I'm onto something. Yes or no, Haraju? And we're seeing some volume. I'd like to see a bit more volume, I think, Haraju, but the candles are pretty good. The price action's pretty good. Look, I don't mind it. It's just a bit sketchy, right? I mean, look at these candles. They are sketchy, sketchy, sketchy candles. but I think it's pretty good. Look, it's a plus 1/3 RRG. It's not more than that. And then see how you go. But I think you're fine. Look, I'm happy to add a third. I know this is a problem. This is a big problem, to be fair. Maybe that's holding me back. Look, this is the most speculative, crazy, dip a toe in the water sort of stuff, okay? And you go into these ones knowing exactly what you're getting, okay? It's on the label. It's on the label. What's the label? That big dark pink zone. Can we look at some gold stocks, says Carlo. Of course we can look at some gold stocks. We've actually just done Ramelius. So let's pick up from, maybe even that one's a gold stock, I wouldn't know. Resolute, and I had somebody tweet me this morning that they were going to sell 1/3 of the position. Like clockwork, it's up today. So, you know, it's frustrating. I know it's frustrating when that happens, but I think you're absolutely correct that given the way this is starting to top out, minus 1/3 is the way to go. And don't forget, if you're using my methodology, it's a little bit bittersweet, isn't it? You're bitter at me, right? Because you've exited 1/3, but you should still be a little bit sweet because we're happy for it to go up because we've still got 2/3 remaining, right? And this is kind of the trick here. We're giving it the greatest opportunity. We're giving this company everything it needs to prove itself to us. You can see the plus 1/3 previously down here. And let's hope it keeps going up. Let's hope we get more buy signals. Okay, look, hold for now. Absolutely unequivocal hold. We know if we see more black candles. Okay, we know if we see the black candles popping in around here. If we see those upper shadows popping in around here, we know that's going to change our view, and we might have to sell another third, right? If we start to see this sort of stuff, but we don't know the future. So let us just see how this one plays out. But I'm a happy holder in the meantime. I think today's candle, the other great thing about today's candle is it sets this as an important pod, right? And beneath that pod, so close less than pod is minus 1/3. Okay, so the other great thing is yes, it's bounced, but it's giving us other places beneath which we can continue to manage our exits. And yes, we can be annoyed that we got out 1/3, or we can say, you know what, isn't this wonderful? I know exactly what to do here. And you knew exactly what to do with the minus 1/3. Yes, it's frustrating, but you knew what to do, and you know what to do now. I think that's the greatest benefit of anything I can show you is dispelling all this frustration as to I don't know what to do next. I do know what to do next, and I do know what to do here. This is Newcrest Mining, but if it closes beneath there, you would continue to exit this one. Okay, and we've seen reasons to exit this one in the past. Can I buy Newcrest? No, that is absolutely off the table. Look at the short-term trend. Look at the price action. Look at the candles. It's a pass for me. NST. I'm going to put in that category. I think it's very strong. Don't get me wrong. I think you'd be happily holding. You'd be like plus 1/3 or plus 2/3 on this, depending on the signals. I don't know. But you'd still be holding some here. You'd still have some remaining on this, right? And you would continue to maintain that position based upon this for two possible reasons. One, you like the company fundamentally. Hey, that's your gig. No, it's not mine. And two, there's nothing else better you can do with it, because the problem comes when you have other things that are better. And we've seen a bunch of them today, right? That are demanding our capital, plus 1/3, plus 1/3, plus 1/3. And surely that puts into question this idea of just hanging on to stuff on the basis that we've got 1/3 left, it's a great trend when there's other stuff to do. You might find that other opportunities are knocking these remaining 1/3 and 2/3 out of your portfolio because you've got a finite amount of capital. That makes sense. Okay, I have to do DVP for Marco. Marco, I saw yours last week, and apologies I didn't get to it, but I have written it on my list here today to do it. So this one's for Marco, and it was for somebody else. I can't remember. Somebody asked me this morning on Twitter as well. It's had 3 ugly little sessions there, hasn't it? So these 3 are not great. They're disappointing. But this is encouraging. We've got a shadow. Look where the shadow's coming in, the light green zone. This is still good, and today's candle is appreciated. Okay, I would say up to those 3 candles, it was looking fantastic. Really nothing to worry about. This is too far away, I think, to sort of invoke supply at that level. But I guess we should understand that with a point of supply as major as that is, and the reason why it is quite major is, look, it's at $4. It's like right on the knocker. Okay, for people that don't believe round numbers matter, that's literally $4 on the knocker. So we know it's lurking and it's sort of manifesting itself. Look, I think we're okay, Marco, as long as we continue to trade above that shadow. But as we start to trade beneath that shadow, I'm really concerned. And certainly if we're trading down here, then I'm of the position that there's no longer any good reason to remain in it. So, you know, it's probably, I'll give you a number. If that high there is 327, I'm going to say that if we're starting to close less than, say, 325, then we're certainly exiting some. That's compulsory. And then we could also see stuff like this, right? And if you're starting to see in the pink zone, the black candles or the upper shadows, then we would also be acting prior to potentially a break of those demand zones. I could go a hold. I'm not a buy for obvious reasons. Let us keep going. Let us, and we're getting close on time. Please stop typing in new ones and I will get to the bottom of these lists. I didn't enable the chat. Sorry, Nick. I forgot to do it, but the questions have been coming through regardless. MQR. Okay, Marquee Resources. So, and again, another one of those, I won't show the shark video, but we can understand that. And you know my mentality. You know that I like these big white candles. I like it when they occur in volume, and I'm happy to go plus 1/3. I won't type it in because I didn't tell you to do it. But yesterday's close or around today's open would have been the time to do it. I can't tell you to buy it now because we've got an upper shadow coming in. But if you have it, I would hold it based upon that candle. If this candle turns into one which the shadow is complete, okay, so all shadow and starts to be a black candle, then buyers off the table, and you're probably going to be looking more to the exit side of things, okay? But these are dip the toe in the water sort of stuff you're totally expecting, right? Don't be surprised if you lose the toe, okay? But today's not the day. Yesterday, towards the close, might have been the way to go about this. If you've got it, as I said, based contingent on today's candle, I can see a path to holding it. It's not a buy for me. That's from Brett. Terrible chart to date. It's had 2 good days of volume, massive white candles. Therefore, looks like something big money is coming in. Yes, I agree. But unless you can kind of get it on that first pulse, Brett, the second, third days, I think you're getting into that category now of just waiting for that supply side response. You want it to be very minimal, demand holding steady, and then you're trying to get that next run. And that could be 2-3 weeks away. Okay, so if you can't get that first quick pulse, then you're probably just waiting for the consolidation and the next move up. From Carlo ZEU, looks very good. No complaints on that one. I can see from the candle straight away, it's not the most liquid of companies. We're coming up to a big area of supply up here. It's one of those, you're going to hear me say, I'll say this many times, happy to hold it, not a buyer. These 2 candles here are problematic. Certainly today's candle, if it closes there, prohibits a buy. Would it constitute a take profit, or take some off the table? I don't think so. I think you're a happy holder. Let it pull back, let it do its thing, and then it could probably go back into that supply zone. If you're really jittery, take 1/3 off the table, but no more than that. You're still holding a bunch. Yesterday, well, not yesterday. This is sort of more of a buy day here, and probably even down here. But look, hold / manage your risk if you're a bit nervous. It's not a buy. This is not a buy for me. Nelly, looking for a new entry point on Wesfarmers. No, I think Wesfarmers is too early if that's what you're referring to there, Nelly. Hello, how are you? I only have 1/3 on QOR. Let's just remind myself I've done it. Okay, yep, perfect. That makes sense to me. Okay, we're going to do all of the streamers now. And let's make sure I didn't have anything coming through on LinkedIn and Facebook. Sometimes get those coming through just in the interest of trying to get everybody's questions answered. No, nothing on Facebook there. Let me do, actually there's one I need to do for Michael. That one has come through on YouTube, XRO. looks great, Michael. What today's candle is just fantastic. I think we had some issues through here, but again, that light green zone and maybe the takeaway point today, and we like these takeaway points in each session, don't we? Is just how darn good my light green zone is, bouncing off that literally like a trampoline. It is invisible to everyone else. Don't forget, nobody else can see our light green zone. But there it is, bounced off that. And this is, look, happy hold. In fact, if it can close, so if close at high, then 100% for me, plus 1/3 on this one. Looks fantastic, no complaints. Yes, there's a little bit of a POS there, but I think we've dealt with that. I think this was the reaction to that POS, and now I think we can go up and we can have a look at 120 with some confidence. I know many of you are on it, so happy holder on that one. We got on that one pretty early indeed. I've done RSG, I've done RFT. This one's for Curvy on the Twitter. You can see we've talked about this one in the past. I think I've said something along the lines of, look, happy to hold it. I'd love to see better price action. Look, I can go ditto on that. You can see I've done lots of stuff on this. Let me get these out of the way so I can see what the candles are. Is the last couple of trading sessions, are they so sinister that you need to sell? No, I don't think so, because this is still fine and this is still fine. So it's just not naturally a chart that I would gravitate towards, because you can see how the price action is this, okay? This is the price action. It's not great at all. But I can go hold on that one if that's the one you love. Aristocrat Leisure, interesting. We did, I think, maybe talk about getting out of some of these in the past. I would say certainly through there you would have lightened the load, but perhaps frustratingly for you, you would be getting back into it today, because I do feel that if we can close at the high today, we're plus 1/3, and I don't know, is that probably the 10th or the 12th one we've done today, ladies and gentlemen, if we close at the high plus 1/3. So what that's starting to tell me is that maybe there's, as bad as this looks, and this is going to be the XJO. Look, as bad as that looks, I mean, that just looks bloody useless, doesn't it? Compared to something as wonderful as this. And I tell you, if you think there are buys today on the ASX, we found a few, I agree, but we've found just so many more on Fridays for all you ASX only listeners. I'm trying to shake you by the shoulders and tell you, tune in on Fridays. There's so much stuff to buy in the US, because look at the chart. But I'm starting to get the feeling from some of the stocks we've looked at, and maybe we're a bit biased today because you all follow my methodology now, and you're finding the setups that you know I like, and you're asking about them. But we are seeing some really interesting stuff today, which is great. Okay, I've done all of those. Let's head over here. The short Nasdaq. Why would you want to do that? SNAS. There it is. Ultra short Nasdaq. For Hoozle Finance. No. Why would you do that? That's totally the opposite of me following that trend. No, I'm not shorting the Nasdaq. No, you can go for it, not me. Look, as a hedge. So if you're long to the teeth, all right, of everything else, and you wanted to have some of this, all right, as a bit of a protection, a bit of an insurance policy in your portfolio, okay, that's a little bit more appealing to me, but not just to short it just to be short it, because no, that's not following the trend. Stuart, CCP, starting to look half decent. I mean, if you've been sort of suffering on this one, Stuart, then I like the price action starting to turn around. We can see the short-term trend zone, going from impeding upward price action now to supporting it. That's good. But there's so much more this needs to do. Look, last time I looked at it, you can see I said 0% buy, 15% hold, 85% sell. I think that view has been vindicated. I gave it a 2 out of 10. Let me copy and paste this, Stuart. I'll give you my opinion now. So let's go copy and paste. I'm going to go 4 out of 10. I think it's getting warmer. In terms of, this is quite interesting. We'll do this time. I still think it's a 0% buy. It still needs to too much. I need to see the price action, high peaks, high troughs. I need to see a cluster of white candles, predominantly white candles, lower shadows, and then you've got that giant long-term downtrend zone to deal with, and that thing is going to be a pain in the you-know-what. So I'm going to stay 0% buy, but I'm probably, no, I don't think I'm sell. That's the thing. I think I'm 85% sell and 15% hold now. 85% hold and 15% sell. So we're going to switch those around. Isn't that interesting? And this is how technical analysis works, ladies and gentlemen. It's not static. It changes. If you're a trend follower, your view changes with the trend. You love a stock. It's the best thing in the world. You don't like it. You hate it. It's not bad. It's the best thing in the world. All right? They're just cattle, ladies and gentlemen. They're just cattle. And we're just trading cattle. I've done that other one there. IPG. I won't tell you the story about the farmer and his cattle. Some of you have heard it, but think of that. IPG. Okay, I may have been asked about this one as well on Twitter. Okay, it looks great. No complaints. 100% hold. It is a picture. It is a picture of demand. There's nothing I don't like on this chart. So this, let's do the percentages. I'm going to 100% buy/hold, all right, and 0% sell. There you go. Plus 1/3. No troubles on that one. Wait till the end of the day. Make sure it's closing near the high, preferably. That's for Michael. This is for Rich Lisa, EOS. Let's check it out. Oh, this is good. I like this one. Okay, this is your turnaround play. So how many have we seen today where I've said, oh, shark video, it's in here, it's a bit early. Look at this. Long-term trend is changing. Okay, it tried to change here. This is why these are toe in the water sort of stuff. Look what happened. Wow. How good's my dark big zone. And look on the way up even, support. Once you break it, it was never the same again. Now, this is an extended period of orange. We're in the orange and we're pumping out white candles. This one here, that's a monster. That's the key. That is in fact, these three here. So between these three candles, and let's call this scenario 1, and now it's scenario 12, and this is scenario 13. So between scenario 12 and scenario 13, they are the key to understanding how demand is coming back into the market. It is beginning to overwhelm supply. Was there lots of supply? Yes, there is. But that supply now is less substantial than the demand. The demand is in excess of supply. And we're going from this area here, acting as dynamic supply, into dynamic support or demand. And this is very good. So this is a plus 1/3. So let's just, I do need to cover my backside by saying close at high, because this is how I operate. Equals plus, I almost said minus there, plus 1/3. And it's magic for me. So this is almost a textbook turnaround play. I'm a happy holder if you've got it, and a happy buyer there, dipping a toe in the water on EOS. Thank you very much for that suggestion. Rich Lisa, I think is how you pronounce that one. Jacob's got ZEU, which we've actually done before. Adonis was saying not in it. He's interested in it. That's fine. That's from before. ESPO, we're going to do on Friday. Tim, and I've at the bottom of all my lists. So let us head back here. Don't run away, because I need to tell you about a couple of things. The first one is, yes, there was previously a July 29 in Sydney, and Think Markets have taken that off the agenda. Not to say we won't do one sometime this year, but we're going to do one in the Think Markets hometown of Melbourne to start off with. There is a landing page coming to register, but in the meantime, please send your interest to ncoulson@thinkmarkets.com. Nick's online at the moment, and if you don't want to email, I've just set up the chat here. You can ping him on the chat right now and just say you're interested, or get in touch with him that way. Two of my very, very good friends, and two people you definitely want to hear from, really just telling you about their approaches to the markets, how they break down both reward and risk. And of course, I'll be talking as well. I'm maybe not as good as Jason and Kel, but hopefully I'll give you something that'll make it worth your while. Live in person, we're going to be at the Marriott on the starting at 9 o'clock. We've got some further details there. So Nick Coulson is who you need to hit up on that one. Registration coming shortly. We've had so many requests for US shares, which is wonderful. Tune in on Fridays. Head to www.thinkmarkets.com/eu/webinars for the registration details. If you're not client of Think Markets? Well, you certainly should be, because we are the good guys in the Australian broking scene. We have everything you need to trade in terms of your actual shares. So your CHESS sponsored, HIN sponsored, $8 flat rate. But it's the CFDs where we absolutely excel. And I do think you should be investigating, because it facilitates my methodology, that getting in at thirds, that getting out in thirds. If you're paying $8, it could cost you $24 brokerage to get in, $24 to get out. Commission free on our ASX CFDs. You can pretty much trade anything that we've talked about today. And if you can't, certainly give us a call, and there's a very good chance we'll add it to the platform. Head to www.thinkmarkets.com.au for details. And why us? We are an award-winning broker. We just got nominated for a Best Platform Award here in Australia, but we have offices all over the world, and we're regulated all over the world. Your money is safe with Think Markets, and even better, you get a dedicated account manager with 24/7 customer support, and my analysis isn't too bad either. Head to www.thinkmarkets.com.au. If you're watching on any of the streaming services, super important, hit that thumbs up button. Let me know you like what I'm doing, so I'll continue to do more of it. Helps us climb the rankings in the Google algorithms as well. Hit the subscribe button to stay notified of any of our future updates. Apart from that, it has been an absolute pleasure chatting with you today. Hopefully you enjoyed it. I did. All the best for your investing. Till we catch up again. Bye-bye for now. Before you run away, please note that everything we've discussed today is general in nature. It has not taken into account your personal financial circumstances or particular needs. So before acting upon any of that general information, you should consider it carefully or seek the help of a financial professional. You can learn everything you need to know about Think Markets and our products by heading to our website and downloading our PDS.